How's everybody doing today? John Napolitano here with you from Top Trading Pros. I hope everybody's having a fantastic day or evening whenever you're watching this video. Reason for this video is I've watched some interesting price action in the NASDAQ the last couple of days. As most of you probably know, the NASDAQ, or the technology weighted part of the market, has been on a tear since the beginning of the year. Lots of people have made lots of money, but unfortunately, lots of other people are trying to play catch up. And that is probably what's happening right now. And one of the things I want to talk about when creating this video is how to counter trend trade effectively. A lot of times when something rips really hard, the temptation is to go short and to put a lot of capital into a trade like that and potentially risk unnecessary amounts of money and to not have a really good plan in place. In the options market, I teach my students at Top Trading Pros that there are many ways you can issue a counter trend trade without necessarily having to spend a lot of money or just buy straight put options, for instance, which could tend to be expensive in a higher volatility environment. As we're sitting here right now, the VIX is actually up quite a substantial amount. It's about up 17% today. So obviously volatility has returned to the market a little bit this morning. There was some futures expirations in that market, so that might have something to do with it. But bottom line is volatility spiked a little bit. So in an environment like this, when the NASDAQ is at an all-time high, at least for the last year, it's up 30%. Basically, what you want to do essentially is do credit spreads, do trades that give you defined risk and defined reward. And what I mean by that, instead of just going ahead and shorting something like this, I actually have Oracle on my screen right now. As you can see, for the last 2 days, it has pulled back. So it has refused to go any higher, at least for now. So this seems to be a little bit of a ceiling, this 125 price right here. So what I teach my students is, listen, it's really easy to go short something like this, but we have certain tools in our options toolbox that I teach our students how to effectively trade things with defined risk. So if you don't think it's going to get past this little line that I drew, if you think that maybe it kind of found a little bit of a top here, maybe it's going to pull back for maybe a couple of days or even a week, you can do something called a bear call spread. I teach my students how to do a bear call spread, when to do them, what expiration dates to use, and what strike prices to use. If you want to learn these types of strategies, please spend some time with us. You can check out our website, toptradingpros.com. We'll keep doing videos like this, basically to educate people who want to just get their feet wet. But check out our website. We provide education, not only free education like this video, but we also provide coaching and other types of products and stuff like that for those who are interested. So what you would do in a situation like this is essentially sell the 125 call options. When you sell a call option, unfortunately, you have a major obligation to deliver 100 shares at 125. Well, guess what? You probably don't have those 100 shares at 125. So that would be a naked call option, which is what you don't want to do. To protect yourself, you would simply buy a call on top of a trade like this. So maybe you would sell the 125s and maybe you would go ahead. My screen is not going to fit here, but I think you get the gist of this. You're going to maybe sell the 125s and buy the 128s or buy the 130s. Now, keep in mind, the wider strikes that you pick, the wider strikes that you pick, the more risk you're going to have in that particular trade. So there's ways to figure out what your risk reward profile is, and there's ways to figure out what makes the most sense for any particular situation. So this would be a situation where I would look to maybe capitalize on a trade like this within the next couple of weeks. I would not be in this trade more than a week or two, because really all I'm anticipating is a mild pullback. Remember, the trend is still up. And that's the problem with counter trend trading. I'm not looking to hit a home run here. What I'm doing is I'm expecting this to kind of meander around, maybe do something like this for a little while. And then, maybe if the market decides to go higher eventually, maybe it will break out to a new high. So that's pretty much what I'm anticipating. That's what the market is giving us too. So I also teach my students, which is really, really important, to essentially let the market dictate to you what's happening. Right now, the market looks a little tired. So chances are stocks like Oracle that have had a wonderful run are also going to get tired. So you have to kind of align your strategy with what's going on in the marketplace as well. That's another thing we teach our students, how to come up with these types of ideas every single week. So I hope this short video was helpful. I'm just showing you a safer way to play a short strategy instead of just going out there and selling shares and risking all that capital, or just buying straight put options, which are basically 17% more expensive than they were yesterday. These are things to keep in mind. So we don't want to, over time, those types of incorrect trades affect your overall P&L. And at the end of the day, it's making money is what counts. Being consistent is what counts. And these are types of strategies that will help you along your way. So if you have any interest in this stuff, keep watching these videos. Please like and subscribe to our channel. We'll keep putting out content and talking about things as they come up. And if you want to receive some education from us, check out our website, toptradingpros.com. Please enjoy the rest of your day. I hope you guys are doing great, and I will talk to you guys soon. Take care, everybody.